Greetings, guys, and welcome back to my channel. Happy New Year, guys. Happy New Year. I believe, I believe we're still in January, so it's still a proper custom to say Happy New Year. I hope so far you're having a beautiful year and a blissful year. By name, guys, I am Gatlawa AC the Sun, and I'm the founder and the CEO of Bunafex. Now, guys, this year we're coming with very big things. We have changed the whole thing, and we have decided that we are going to teach, guys. We are going to give you information that will help you become better traders, and we are just going to stop just showing you graphs of profits without actually showing you how we actually start making those profits. Now, guys, I want you to understand something, guys. Today I would like us to actually look at a topic. Our topic is actually based on risk reward. The reason why I actually chose this topic is because I saw a trend. I'm based in South Africa, by the way, and I saw a trend, especially around our country, where you find that we have a lot of blown accounts, left, right, and center. People are blowing accounts. Even if you can check on Twitter, on TikTok, or even right here on YouTube, if you can search for blown accounts, you'll see multiple blown accounts. And it raised a question in me. It raised a question in me as to say, how is this happening? How is this possible? Because I believe we have great intel and great information when it comes to trading. So I actually brought it down to this point that our problem is risk reward. The problem that most people are actually facing right here, not for me particularly in my academy, but around the people that I've actually seen that I've actually spoken to, is their risk reward. Now, guys, what is risk reward? The risk reward ratio is the risk that actually entails how much you're going to risk per trade and how much you're willing to gain per trade. Now, risk is the amount of capital you are willing to risk on a single trade, and the reward is the potential gain you are willing to make from a single trade. That same single trade. You understand, guys? So, for example, my risk reward ratio perhaps might be 1 is to 2, and meaning if you risk 50%, then your potential gain will be about 100 USD. This is different for our academy because our academy has a risk reward of 1 is to 10. That is our risk reward ratio. I'll come back to it later in a few. Now, guys, I want to also clarify something. Most people are aware of this thing about risk reward, but the problem that comes is that, remember, the risk reward ratio is a ratio in terms of percentages. Now, the percentage is actually based on the account. The problem that most people are actually doing right now is that they say they have a risk reward of 1 to 2, but their percentage per account on that account per trade is actually very high. You find someone that is having an account of about 100 USD, and their risk reward is actually 1 is to 2, but they are risking 50% of the account, meaning $50, to actually gain how much? 100 USD, meaning they are risking $50 to gain, they're risking 50% to gain 100%. That is also 1 is to 2. Some people even go worse and they risk 100% to gain 200%. Now, these numbers are they are enticing to people when you actually look at them at first glance, because you're like, with just one single trade I can just double the account. But the fact is, with just one single trade you can also blow the account and lose all your funds. Now, look at trading more like a profession. Look at it more like an investment, like it's a business, not gambling. The reason why I'm saying this, for example, you have an investment portfolio. That investment portfolio entails of maybe it has about 100,000 US dollars or 100,000 rands inside of it. What you do is that if your risk reward is 1 is to 2 and your percentages is 50% per trade, it means that right now, if you invest in a company and you say you want to invest 50% of your portfolio, and you invest in only one company, it means if that company fails, you are back, you are down 50%, and if it does prosper, you are up 100%. Now, the problem with this is this: it means you can only invest twice, or you can only invest in two companies before your whole portfolio crashes and crumbles. So, what we suggest is something like this. If you look at our risk reward, let me actually bring it here so you can actually see what we are actually talking about. Now, our risk reward has an average of 1 is to 10 minimum. So, meaning if our account is about 100 USD, per trade we can risk 10% and we have a potential gain of 100%. This is also aggressive for some people who are having big accounts because remember, you can't trade your small accounts the same way you can actually trade your big accounts. Your percentage sizes are actually way too different, and the amount of money risk per percentage is actually far more different. Now, this type of risk reward is the risk reward that I would actually use on an account flip, meaning if I want to do a challenge from 100 US dollars and I say I want to reach about 1,000 USD in less than 2 weeks or in less than a week, I would use this type of percentage of 10%. But on an account that is about like 10,000 USD, I would particularly risk about 5% to gain 50% of their account. You understand, guys? Now let me bring you back to the risk reward thing that I was actually talking about. The good thing of a risk reward that gives you 1 into 10, which is actually the risk reward we are having in our academy, is that let me take it back to the thing of portfolio. If you're having 100,000, it means we can invest 10% in 10 companies. And let's just say out of those 10 companies, let's just take out four. And we say two of the companies fail, meaning we have lost 20% because it's 10% per company. And two companies prosper. It means right now we have gained 200% of our portfolio. Remember, our risk reward from 10% to 100%. 1 is to 10. Meaning when two companies prosper, we have gained 200%. When two companies lose, we have lost 20%. Now, meaning our average or our sum of the money that you actually have on the account right now will be the 20% minus the 200%, meaning we are having 180% profit. Now, this allows you that even if you face a losing streak, remember, losses are actually part of Forex. There is no trader out there who can actually claim to you and tell you that they have never lost or that they don't lose a trade in the whole month. It is highly impossible and rarely that it will happen for someone to say he never suffers losses. So the trick here is to make sure that your profits or your winning trades can make you more, and your losing trades you lose less. You understand? So that's just the magic trick in it. With your wins, you must make more, and with your losses, you must actually lose less. You understand? That's the whole trick about the risk reward. Now, I have met even crazy people who are actually promising people that they have an 80% uh, re- uh, 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 an 80% accuracy strategy. This means that their strike rate is that in 10 trades, 8 trades win. But you find that their risk reward is like this. So, meaning they are risking 3% to gain 1% per trade. What does this entail for us? It means that on a single trade, he can lose 80% of the account. If he's risking about 10%. On a single trade, he can lose 30% of the account. And um, for him to get back to break even, for him to get back into profits, he has to win 4 consecutive trades. Whereas with us, we can lose five. Listen to me, 5 trades. We can lose 5 trades, and in that 5 trades, we have lost about how much? 50%. And with just a single trade, we have made 100% profit, meaning our losses minus meaning our wins minus our losses gives us a profit of around 50% gain. So even if we lose 3 times and we make one profit, we are up 70% of the account. So that's why I'm saying our risk reward is great in the sense that we look at the fact that we can be able to say we are comfortable to be wrong in the markets. We are comfortable to take one loss or 2 losses because in just one win, we're able to make more. Now, guys, I hope this video actually opened your eyes to the idea of risk reward, to say now start trading more like a company and stop trading like it's gambling. Now, we have a trade breakdown that I'm actually going to release. There's a trade that we actually took today on Euro USD. We made a lot of profits. We made about 17% in that single trade. We made 1 is to 17. Meaning if we reached about 10%, we have made 170% profit. I'm gonna share the trade breakdown here as soon as we reach 100 likes, guys, and 100 views, guys. Please like, please do subscribe. It's me, your boy, FX, signing out. Stay blessed.